All right, so we'll check on the momentum first on all the trading picture on all the time frames. Remember, we're expecting the a rejection at overbought level. Here, we're not getting it because we're getting continuous histogram plot, and therefore, what we're looking at a higher wave B is probably correct. Take it to 4 hours. We did comment this earlier. No traction, at least on 4 hours, so no longer the agreed trend. We have the labels here, hopefully always there, correct. So we'll have to segregate, of course, that leg C is finished. So you have an A, you have a B, this is a 1, 2, and 3, or an A, B, and a C. Meaning when we take this to 5 and 15 minutes, you still believe we can get, I would personally believe, we should be getting attacks of level 1. Gonna have to highlight this very much. That's where we expect the bounce. But in reality, the market is showing, like we were saying earlier, that gold is undecided. It's still a very valuable asset to what's going on nowadays. What's going on nowadays is uncertainty and division, global division. If you're going to have uh, a BRICS currency, it must be gold backed. And from what really must be gold backed. And if Mr. Trump is serious about what he's saying, many leaders are going to be going out of the US dollar personally. It's no longer about trade. It's about, who's right and whose opinion will unfold. And therefore, it can be really counterproductive against the US dollar and will increase the price of gold. And therefore, you can see gold isn't retracting below level 3. All right. So at least until it turns out that the US dollar is indispensable, it's going to be counterproductive, and you'll find leaders deciding that, we must pursue this because no one is going to push anyone around, and this kind of rhetoric. All right. So we're looking at, let's move to 2 hours. Again, flat markets throughout. It could mean that in a way, that B runs, it's not even there actually, that we are doing high degree level B immediately, not an A, B, and a C. This level B is not yet showing, but showing somewhere, at least to the right, I believe. It's there. Sorry. If I bounce the level 3, it would mean that I've seen a dot 1 and dot 2. Dot 3 runs up over here. Dot 4 is what I'm doing. At some point, when I get a bounce out of that internal level 1, I'm doing a dot 5. Sorry. I'm doing a dot 5. And that B is just 5 moves, 5 intervals. But I need a trigger and I need traction. Otherwise, I'm speculating. And of course, you don't put money on speculation, or at least not on mere speculation. Speculation is an opinion, that's fine, but if you're going to trade it, you have to have arithmetical confirmation or mathematical confirmation. So this looks like a 4 so far. Flat out that we're seeing here, it looks like it is really a consolidation or breakout higher. Takes out to 1 hour. Now we can begin to see cyclic streams or look for cyclic streams. Minus 140 is not a cyclic stream. But the cyclic stream here has already, of course, occurred earlier in the downtrend. After the downtrend, not yet. So let's take it now to internals. The next is 30 minutes. We're seeing cyclic streams. Not really. And this, in a way, explains it all. So we can, I think, dot this or not. It shows that here we have rejected below leg 1, and we have supported the leg 1. Of course, that leg 1. in the vicinity of level 3. In the vicinity of level 3. This is the level 3. And at the 200-point moving average. And the market is really undecided because the bounce also rejected an internal level 1. And the retraction doesn't know where to go or is going to bounce an internal level 1. So it really becomes apparent that you want to use a robot to trade. It's a consolidation. Now remember, we're saying an A and a B. This is a 1 and a 2. That's what I was just saying. And you're going to get a 3. And you are still doing that B. Now I'm just talking speculation. That's why you have to take it very cautiously. So we get a dot 4. This is dot 4 you're going to get. And then we're going to get to dot 5. Or that high degree B has been an A, and the B and B is just right there. And we're going to get a C, and white is going to do that B. Right. So you want to buy negative momentum triggers, negative extreme. But at the same time, I want to take a confirmation, so I am best in on break of level 1. On break of 2,670. And if we are consolidating, by the time we get to 2,670, we're just seeing more consolidation. Remember, if the market is consolidating, it is, let's say, observing or at an equilibrium price. Doesn't see the necessity to go higher or lower. And therefore, if you're buying into a consolidation, you can just get back down into the trade and not go anywhere. And it's a waste of resource. And we can see it's a waste, seriously. No offense, it's a waste of resource because are you going to trade this momentum? All right, so if I say we're going to take it long because we're seeing some kind of a motive wave inside of this ending diagonal, it really is speculation, and it's not the correct decision to take to place money on an opinion or on speculation. There's no directionless momentum on the 15, directionless momentum on the 5. Right? So, of course, I think a picture is worth 1,000 words, like the saying goes. We just stand out, I think, would be best. Really would be best. Okay, so what are we going to do? We monitor. That's our job. We will monitor. And once we see that there is a cycle extreme, like this one here, for instance, that were bounced in internal level 1, that we are the right fundamental. 5 fundamental should have broken out a while back, but didn't do anything. So that was John's report, 7,774,000. It's a good for dollar number, but didn't really impact gold. So I don't want to say that we do the monitor for you, but we also do the monitor for ourselves so that we pick opportunities and trade them. When we get a trigger at level 1, when we have a cycle extreme to close to level 1, we will have considered that B is finished and we're getting that C in white. Therefore, we will notify and take the trade. Until then, I believe it's best we stand down so that we do not get trapped in a trade that is not really going anywhere.